Are we on the brink of an economic upheaval?
Today we have exclusive insights from Danielle DiMartino Booth and others to help you navigate these turbulent times.
And don't worry, you'll get the critical takeaways in just a few minutes.
Absolutely. Learn why Danielle predicts cautious investing amidst economic indicators.
Welcome to Financial Insights in Minutes, where we condense complex financial analyses for you.
And stay tuned for upcoming insights from Ted Oakley on navigating Q4.
At the recent Hedgeye Investing Summit, Danielle DiMartino Booth shared her extensive insights on the current state of the economy and financial markets.
Danielle's expertise stems from her time at the Federal Reserve and her role at QI Research, making her analysis particularly pertinent.
What does Danielle see as the core thesis in her latest discourse?
She asserts that the apparent recovery in the economy might be overshadowed by rising inflation and stagnating labor market conditions.
Interesting. What types of signs is she specifically referencing?
She points to persistent inflation metrics and a job market that's not creating enough sustainable employment opportunities.
Danielle highlights current inflation trends. What are her observations?
She notes that while the Consumer Price Index shows some decreases, specific categories like food and energy continue to rise.
What about the labor market? How does she view it?
She points out that jobless claims are on the rise again, indicating deeper issues within the labor market.
Any insights on the housing market?
Danielle warns about an oversupply in the housing market, with many new constructions failing to attract tenants.
And how does she feel about government spending?
Danielle believes that increased government spending could contribute to persistent inflation, complicating future fiscal policies.
What predictions does Danielle have for the near future?
She predicts a high likelihood of stagflation affecting markets and advises caution for investors.
Danielle has some predictions regarding market corrections. What does she suggest?
She suggests that investors prepare for potentially significant market corrections as inflation impacts growth.
How does she view the employment landscape moving forward?
Danielle predicts stagnation in labor market growth, indicating tough times for job seekers ahead.
To sum it all up, what key takeaways should viewers walk away with?
Danielle emphasizes the need for investors to stay cautious and informed amid fluctuating economic indicators.
It seems essential to remain adaptable as the economic landscape evolves.
Absolutely. The market's unpredictability calls for a keen focus on both risks and opportunities.
Today, we're diving deep into a video analyzing why the auto industry could be the last straw for global economic stability.
Indeed, the auto sector, once a beacon of recovery, now seems to be signaling impending trouble.
What's the central argument presented in today's video?
The speaker suggests that the auto industry is on the brink of collapse, which might shift the current economic vibe from a soft recession to a serious downturn.
That's a dire situation. What critical signs back this claim?
Declines in sales, rising credit spreads, and plunging commodity ratios all point to weakening conditions.
What's happening with auto sales in the current market?
Sales are stagnating, largely due to fears over job security and rising prices.
How does rising unemployment influence auto sales?
When job prospects shrink, big purchases like cars naturally decline.
What broader implications could this have for other industries?
Weakness in the auto sector could trigger downturns in manufacturing and other interlinked industries.
What does the bond market signal about the auto industry?
Increasing credit spreads hint that investors are losing faith in the sector's stability.
What does auto production say about the economy?
A decline in car production often foreshadows broader recessionary trends.
What predictions are being made regarding the economic outlook?
There's a strong indication that the issues in the auto industry could lead to a recession.
Those are some serious forecasts. What supports this notion?
The rising credit spreads and softening sales paint a troubling picture.
In summary, what are the key takeaways from this analysis?
The auto sector's struggles could very well be the tipping point for a full economic downturn.
Investors need to stay alert and consider these potential shifts.
Absolutely. Keeping an eye on these trends is essential for informed decision-making.
In this weekend's special report, we're unpacking some startling insights from Goldman Sachs on the future of the S&P 500 and the implications for investors.
Yes, with another record high logged, investors have a lot to ponder. Are we heading for a lost decade?
What's the crux of Goldman Sachs' alarming projection?
They suggest we could be entering a lost decade, with returns potentially plummeting to around 3% annually.
So is historical precedent backing this claim?
Absolutely. They cite previous periods like the burst of the tech bubble as indicative of future trends.
It seems investors are pivoting to gold and silver. What's causing this trend?
As uncertainty looms, safer assets like gold become more attractive, especially with Bitcoin's movement.
Are semiconductor stocks really poised to lead the next market rally?
They might be, but the concentration risk is a serious concern. Too much reliance on one sector can backfire.
Despite warnings, investor confidence seems unwavering. What's fueling this?
It's largely driven by current market momentum. People are chasing trends, not considering valuations.
How do interest rate fluctuations play into this narrative?
They can significantly influence market dynamics. Potential rate cuts could further bolster investor optimism.
Earnings season is just around the corner. How crucial is it?
It's pivotal. Good earnings can maintain bullish momentum, while disappointing ones might stir volatility.
How should investors prepare for the anticipated downturn?
They should stay alert and consider diversifying their portfolios across various sectors.
What's the outlook for gold in the near future?
Experts predict it could soar to around $3,000. Definitely one to watch.
What's the bottom line for viewers digesting all this information?
Users should stay cautious and be ready for market swings. Opportunities will arise for those prepared.
Recognizing patterns and adjusting strategies could really pay off as we navigate a potentially tricky market ahead. In today's discussion, we're unpacking Ted Oakley's latest warnings about the upcoming Q4 investment landscape.
Ted highlights a concerning trend. Older investors are overexposed to risk assets, which could spell serious trouble.
What is Ted's main thesis about the current market situation?
He believes that complacency is dangerously high, especially among retirees heavily invested in the stock market.
That's quite an alarming thesis. What evidence does he use to back this up?
He points to the high percentage of financial assets in stocks among seniors, indicating they've forgotten the risks.
Ted emphasizes that older investors are dangerously complacent. Can you elaborate?
Sure. Many have around 2/3 of their financial assets in stocks, failing to recognize the associated risks.
What does Ted predict for the market next quarter?
He anticipates increased volatility due to various geopolitical tensions and economic fluctuations.
Wasn't there a notable divergence in recent economic data?
Absolutely. While retail sales rose, small business sentiment is at an all-time low due to rising costs.
What role does the Fed play in this economic landscape?
Ted warns about potential missteps by the Fed in managing interest rates amidst rising debt.
Any final thoughts on inflation?
Yes, Ted warns that both inflation and rising debt levels could create lasting repercussions on the economy.
What does Ted see as a possible shift in sentiment?
He believes that a sudden market shift could cause panic among overly complacent investors.
So Ted is forecasting a potential downturn.
Correct. He sees signs that investors need to prepare for market volatility in Q4.
What would you summarize as the key takeaway from Ted's points?
Investors should adopt a careful approach, being ready for the potential market challenges ahead.
It's crucial to stay informed and adaptable as the market evolves.
Exactly. A balanced strategy is key in today's uncertain environment.
In today's discussion, we delve into the pressing issue of border security with Dr. Stephen Camarota.
Thank you for having me. It's a critical conversation, especially given recent statistics.
So, Dr. Camarota, what's the current state of illegal immigration?
It's crucial to note that for the last several years, we've seen numbers far surpassing manageable limits, over 1,000 encounters daily.
That sounds concerning. What factors contribute to this overwhelming situation?
A combination of poor enforcement policies and economic instability in neighboring countries fuels this crisis.
You mentioned visa overstay numbers. What's the current picture?
Around 800,000 overstayed their visas last year alone, a significant contributor to illegal immigration.
How are social services faring with this surge?
There's increased pressure on public services. Costs are rising while resources are declining for native citizens.
What about job competition? How does this impact the native workforce?
illegal immigrants tend to take low-skilled jobs, potentially pushing down wages for less educated Americans.
What's the link between illegal immigration and crime?
While overall crime rates among immigrants are lower, the influx raises concerns about gang activity and safety.
What reforms are necessary to address these issues?
We need a multi-layered approach, better enforcement of existing laws, and revising how we handle legal immigration.
Looking ahead, what's your outlook on U.S. immigration policy?
There may be a stronger push for enforcing laws while balancing humane treatment strategies.
In summary, what should our key takeaways be?
We must recognize that while immigrants contribute greatly to society, the complexity of the current situation demands careful evaluation and reform.
In this week's captivating market analysis, we explore the nuances shaping today's stock market, just like the analysts did.
Indeed, it's a wild mix of factors, with the dollar rising and the market hitting all-time highs despite economic uncertainties.
So, what's the core thesis highlighted in the video?
They argue that while retail sales remain strong, underlying economic signals may predict increased volatility as we approach the election.
That's a compelling view. What specific indicators did they refer to?
They noted rising inflation, a volatile dollar, and fluctuating employment data as notable risk factors.
Let's delve into the current market trends. What are the significant takeaways?
The market has reached unprecedented highs, with investor sentiment leaning heavily towards greed, yet fears loom.
What are the analysts saying about the economic indicators?
They highlighted sustained inflation levels as crucial, fueling uncertainty in the market despite strong consumer confidence.
And regarding bonds,
rising 10-year yields cast doubt on market stability, creating complex dynamics for traders to navigate.
which sectors are currently outperforming?
Utilities have shown unexpected strength, often considered safer bets amid market turbulence.
Any predictions that stand out?
The analysts anticipate that the market could see a substantial squeeze as we move into election aftermath.
What's the buzz about future market movements?
Analysts foresee a possible squeeze driven by market conditions shifting after the elections.
And how is the dollar affecting commodities?
Interestingly, even as the dollar rises, gold continues to reach new peaks, indicating shifting investor strategies.
To wrap it up, what should viewers take away from this?
Caution is key. Monitor emerging trends while preparing for unexpected market shifts.
Staying attuned to these changes sounds crucial as we transition into a critical phase.
Absolutely. It's all about maintaining awareness and being ready to adapt as conditions evolve.
What a fascinating array of insights today. We heard from Danielle DiMartino Booth, who cautions us against rushing into investments in these uncertain times.
Absolutely. And Jeff Snider raised important concerns about unemployment trends that could hint at a recession, which is not something to take lightly.
Yet, Ted Oakley pointed out potential opportunities in Q4 despite the gloom.
And Dr. Stephen Camarota highlighted how immigration policies could play a pivotal role in our economic recovery. It's a lot to absorb.
It really is. And for those watching, remember, it's crucial to stay informed and flexible with your investment strategies. If you found value in today's discussion, hit that like button and subscribe so you don't miss any future updates.
Yes, folks, stay tuned for more insights and fascinating discussions. And don't forget to check out our other content on the channel.
Thanks for joining us, and see you next time on Financial Insights in Minutes.